what's happening, John, with investors' love affair with the Mag 7. We have seen investors rotate out of these stocks.
Yeah, it's, last time I was on here in November or December, I was really getting quite pessimistic and, and grumpy, quite frankly, because portfolio results have been very strong for a number of years, and it was getting harder to find value. And investors were super optimistic, very, very high levels of optimism, both individual investors as well as institutional investors. Always a huge warning sign that there's troubles ahead, because when everyone's bullish, they've all got money invested. Today, we have the complete opposite situation, where investors are as pessimistic as they were when we are all locked in our homes early during COVID, and also during 2009 when the financial crisis was at its peak meltdown. So to think that investors are as pessimistic as those 2 points in time right now is really quite startling. And there was an article in the Bloomberg this morning talking about institutional investors are 32% underweight in US equities. I think what's going on here is, first, there's some recency bias going on in the sense that these stocks had all very powerful years, and people are flashing new shiny objects in front of investors like gold, which I would point out has underperformed the Hang Seng and a lot of other markets so far this year. So I think there's been some profit taking going on. And there's some stocks that were kind of like bubbly last year. Tesla, stock market's a voting machine, so it was voting for Elon Musk because he was a friend of Donald Trump, so the stock was up huge. Now it's down 50%. Nvidia was trading at enormous valuations. It's down 40%. But some of the other ones that are trading at really, really good valuations now. Meta's down 20%, trading at about 20 times earnings, future earnings. Google's trading at about 16 times future earnings, down 20%. Amazon's back to where it was a year ago today, trading at 24 times future earnings. So there's money flowing around looking at new places to go. But it really strikes me that people are selling the most dominant, powerful companies in the world in a pretty aggressive fashion over the last 24 days or so. Whereas you look at, you look at other stocks that are more sensitive to, let's say, some of Mr. Trump's policies, they're holding in quite well. So there's something going on other than just tariffs. And I think that...
And it's not high multiples, you don't think, because the multiples are reasonable now.
Google's trading at a multiple that's less than the market and growing faster and has enormous profitability, which doesn't. The Russell 2000 is down 18%, and it's the 2,000 worst companies in America, trading at 21, 22 times earnings. There's a lot of, either the other stocks start to throw in the towel and they have a real 20% correction. I mean, the S&P's down 10, let's say, and the biggest companies are down 20. So something's going on. Either the market's close to a bottom, which would be my bet, or at least in this kind of stocks that I want to own, or else we're going to have that final flush where the companies that really are vulnerable to the kind of things that people are talking about in the news all the time start to catch the reality of saying, I got to sell those things too. Now, it could be a few other stocks that we need to sell, more aggressively, like Apple could go down a lot more because it's still very overpriced. Nvidia could continue to fall if the capital spending falls off the cliff between the big fork that I mentioned earlier. So there are some other bricks that could fall, but from an investor standpoint, when investors are this pessimistic and nothing's actually happened yet other than talk, future returns to the stock market are very, very positive.
That is